Good morning, ladies and gentlemen. My name's Chris Gilmore. I'm the chairman of the Investment Analyst Society, and it's indeed a pleasure and a privilege to introduce ARC, or as I was told this morning, I can refer to it as ARC, on the occasion of their maiden 2017 interim results. And I think it's made all the more pleasurable being in this wonderful auditorium here, which really is purpose-built for the occasion. When a few years ago it was announced that ARC was going to come into fruition, a lot of us in the investment industry, there was a lot of conjecture about what was going to be in their sights. And as time has progressed, since the listing back in September last year, we've seen what the investments are. And by Jove, it's a wonderful diversification that they've achieved. And I think, the visionary aspect of this with Patrice Motsepe, we don't have to elaborate on that. And putting the two Johans, if I can use that expression, Johan van Zyl and Johan van der Merwe in, again, a stroke of absolute genius. So with that in mind, what I'd like you to do is sit back, relax, put your cell phones onto silent or off, and I'm now going to hand over to Johan van Zyl, who's going to kick off the presentation. Thank you.
Thank you so much, Chris. Good morning, ladies and gentlemen. It is a pleasure to have so many people here at which is our maiden interim results announcement. As you know, we've only listed in September of last year, and it is a very short period. In fact, we only report on essentially 3.5 months of effort. So I'm going to quickly take you through a few things, and the outline of the presentation will talk a bit about strategy, which I will do and structure and so. Then Michiel Reyneke will talk about our financial review. As you know, it's a Mauritian listed entity, so quite a few of our executives, and including our financial director, had to go to Mauritius, and they're still on the way back. Bridget Khadebe to get things finalized yesterday and signed off and so, and I can report that everything went very well over there. But Michiel will take the financial review. He's done many years of that at Santam, as you know. Then Johan van der Merwe will give us a bit of the portfolio overview, and really talking about the issue that we have so many investments and really trying to link it together for you to understand what we're trying to achieve strategy-wise. I think that is very opportune and what we would like to do. So I'm Johan van Zyl. I will start you off. Now, African Rainbow Capital Investments didn't simply happen. It had a long history, and I have to take you through that history, also for you to understand the backing and the structure of what we're about. If we look at it, in 2004, there was a business, Ubuntu Investments, that got started by Patrice Motsepe, funded by him, but with a big broad-based component in there. 22 broad-based companies, including unions, provincial companies, trust for women, chiefs in the country, the traditional leadership, the youth, and several others, as I've said, unions and so forth, but also a community development trust holding 20% of Ubuntu. So it's a real broad-based component. And what makes this different from many others is that although we've started empowering, or as the empowerment partner of Sanlam in 2004, Patrice Motsepe had the vision to keep this group together. In most empowerment transactions, you see the people run away after 5 years. This now has been a substantial period of 14 years, and he's been able to keep the bulk of that together by constantly paying dividends, and every now and then, allowing some people to sell and that sort of a thing, buying back the shares and so. So the deal with Ubuntu and Sanlam matured in 2013, and then a new phase started, where Ubuntu was free to go and use its share, but we did strike a new deal with Sanlam, so we're using their facilities here for free today. I'm very happy to say that, and thank you to them. But out of that, that shareholder value of 15 billion, passive at the time of going, which at the end of last year increased to well over 20 billion because the Sanlam share did so well, that capital is there, and I'm also the CEO of UBI, Ubuntu Investments. That capital then was used to fund African Rainbow, against which we borrowed as a more active vehicle to do some things. And out of African Rainbow Capital, a big part of those investments were listed last year to share and partner. The concept that Patrice had of empowerment going forward, black and white people working together, essentially creating a black-owned and controlled vehicle, but allowing a whole range of people to invest in that. And what we report on today is really that concept, trying to build a new South Africa, at the same time trying to make money, being world-class, which is really what we're about, through the investments, but then using the money that we make through his foundations and through several other initiatives that we have to do as much good as we can in the country. And about half of the money that we actually make gets reapplied in things like education and many other things, trying to make a difference. And that is really the model that we're trying to build here and that we're reporting on. So if we look at ARC Investments itself, and this is what we're reporting on today, it is really the strategic positioning. Firstly, permanently black-owned and black-controlled entity. So we created a fund in which we have 51% black-owned and controlled, which makes that whole fund black-owned and controlled in terms of people partnering us. The key there is underlying high-quality listed and unlisted businesses that we invest in. Without that world-class business, that will grow. So we're looking at quite a diverse portfolio, which is a strength. But the key is, and this is what we'll give you today and later on, that sector-specific focused building blocks in which we operate. For you, it may be several investments. For us, it's a very clear strategy around a particular building block trying to achieve something. The ARC leadership, but also partners. We're not trying to do everything ourselves. We partner with a range of excellent people. You will see some of them. In the mining, we partner with Sipho Nkosi and Bernard Swanepoel. In property, we partner with Atterbury and Jonathan Baer, people who've really proven capability and so forth. And a whole range of them. Johan will talk a little bit about that. Then ARC facilitates access to investments that would otherwise not be able to access for ordinary investors. So we try to do things like RAIN and many others that you can't access, but because of having or requiring an empowerment partner, we make that part of their portfolio, and that makes it possible for you to access that. The investments has to be acquired by BE discounts. We call it BE discounts, but it's actually liquidity discounts, because often, because you're a BE partner and you bring BE credentials to these underlying companies that we invest in, you have a lock-in period of 3 to 5 years generally. And therefore, for that period, you're not allowed to sell, and that then comes with a discount. And you can just open PwC's valuation handbook to see what that generally is. If you're locked in for 5 years, that discount is roughly about 20 to 25. For a 10-year lock-in, it is 45%. Because you can't sell, there is that. So that is really it. So the beauty of this is, while the empowerment people and Patrice and the partners that we deal with are locked in, the investors in this vehicle can, of course, buy and sell the shares. So they have the liquidity that comes from BE. And the Black Empowerment is a very suitable vehicle for redistribution of wealth in South Africa. And going forward with the new president and even with the DA, underlying a lot of what we see is, this thing about industrialists and a whole range of other things, maybe not radical economic transformation, but underlying that certain things. And here is a vehicle that can participate in that, but will allow you guys to share in that. And that is really, I think, the underlying thing. If we look at the investment criteria, we've spelled them out before we list it, but just to reiterate those things, what we're looking for mainly is an experienced and qualified team. And a key component of that team is they must be aligned of what we would like to achieve, they would like to achieve. Often we find experienced teams and so, great ideas, but not aligned with our thinking, and then we can't we can't deal with it, or without ethics, or many of the other things. And so the team that runs the business is really the key. It's like if you want, a partner, you spend an extraordinary amount of time looking at the partner, not necessarily at the business. It's very easy to get things wrong. Secondly, the partners and the business must have some sort of a track record. Often, if it's a startup, you look much more at the partner, what they've done, how many times they've done it, and so forth. That is key. So robust growth prospects is important for that business by itself. So we bring two things. We bring a bit of capital, and the capital itself should lift the business up to a new objective and to a new track and performance level. And the BE itself should do more. So we try to do two things. And then through our intervention and synergies that we bring, we want to bring a third element to that whole process. Established market position, either, or the potential to get there fairly quickly. No use to deal with things that cannot be, one of the top 3 businesses in the country. The opportunity then also for consolidation and synergies. Often we buy a few things, like in agriculture. The key part is to put some of those things together to create a vehicle that can extract value. And in those areas, and Johan will talk about that later on, so that you can see it's not simply for investments in agriculture. They're specific investments that we would like to bring together and work together over a period of time, so that we have some influence in that space. And then, of course, lastly, the commercial prospects, which can be enhanced by having BEE. For us, our shareholders, many of them are poor people. They demand relatively high returns on the equity. Otherwise, they would simply take the money and educate the kids and things like that. So for us to keep the money, we have to have a relatively high hurdle. So the BEE element that we bring must work for the industries that we invest in. So most of them there, for the BEE element, are actually absolutely critical for their survival and moving forward. And that is, allows us then to go into those businesses at some sort of a discount. I think in the operating environment, and this is towards the end of my presentation, economic transformation is an imperative for South Africa, and it continued to be that. And we see a strong pipeline of deals from simply people realizing that they can't get access to contracts, markets, and things like that. And therefore, they come to us to say, why don't you become a strategic partner of us? We'll do it at a discount so that we can unlock this opportunity that we see, but by ourselves, we can't make it work. Then most of the businesses in our portfolio experienced unfavorable trading conditions for most of the period because of the political uncertainty that we've had. Towards the end, December, things panned out in our favor, but for most of this period, we've had quite a difficult environment to trade in, and uncertainty and so forth. And a lot of the good news that's come through in South Africa, a new president, that whole positivism we've not seen, because in private equity type investment, it takes a while for those sentiments to come through. So the improved political landscape towards the end, which we hope to leverage on. And for most of the period, we've actually seen quite weak equity markets, although we've seen the re-rating at the end. But in our portfolio, most of it being unlisted, we haven't taken that into account yet. We haven't taken that into account. So it will come into the future. So if we look at our fund structure in the overview, I don't need to say too much. It is well known that, as I've explained, so we're talking about the listed vehicle here, ARC Investments, and the performance there. It has been incorporated in Mauritius, as I've said earlier. ARC Investments, the ordinary shares are listed on the JSE. It is established in South Africa as a BE investment vehicle through the ARC Fund that is 100% black-owned and controlled. ARC Investments own 49.9% of the financial services portfolio of ARC, and it owns 100% of the non-financial diversified portfolio of companies. And it's a partnership which houses the investments which allow us to keep the black owned and controlled entity in the ARC fund, which underlies a lot of what we do. The way we look at our investments, ladies and gentlemen, is two very clear parts of businesses: financials and diversifieds. In financials, we have four sort of silos or buckets in which we do business. And Johan will tell you exactly how each of the investments fit into this and how they would like to deal with us. Now, in financials, our plan is quite different from the diversifieds. All the investments in financials that we make, we would like to create synergy between them so that they leverage off one another. And we will tell you when Johan comes through, asset management, insurance, special financial services and banking, where we are in that. Some of them are underdeveloped, like the banking time option, which we've only concluded recently, a week or so ago, the final conclusion. But we'll tell you that, so for the period, it was still work in progress. Now, we can start talking about that much more, but how we do that. And then our diversified investments. And what is important about the diversifieds is we have people at the bottom which we essentially use as experts and partners to drive the process. We're not experts on all those things there. So we deal with funds and with individuals and partnerships there that actually drive in partnership with us the whole strategy going forward. So we have 6 of those, actually 5 of them. The other is simply a fund dealing with smaller SMME type investments across this whole range. So it is clearly quite focused, and Johan will talk a lot about this partnership approach. I think with that, I would like to ask Michiel to come and present the financials, and then for Johan to explain how all of it hangs together.
Good morning, ladies and gentlemen. You would have noticed, Johan said we've been on the go more or less 3.5 months or thereabouts. It's his prerogative to deal on an 80-20 basis. I can tell you it was 115 days because I'm an accountant. And a part of that, incidentally, was silly season being December. So what you see in terms of annualization has been done fairly accurately. Unfortunately, that's the cardinal sin of being a financial person. When we listed on the 7th of September, I believe it was the second largest IPO that came out from PwC lately, after Star in the country. We also undertook to give full transparency to the underlying investments, and when you look at the financials, I believe that is what you will see in there, both sectorally and in terms of materiality. We listed. There are concepts that I would like to very briefly introduce to you. Because of the nature of our business, it is appropriate to use fair value accounting. Unfortunately, IFRS fair value has got certain limitations, and therefore we take it a step further to base it on intrinsic fair value or intrinsic net asset value when we get to the end. That is appropriate. What I will do is I will show you the reconciliation, the main differences. So we do use the IFRS basis of presentation on an audited everything so that it's robust, and we'll demystify, if there's any demystification required, the difference. So at listing, our intrinsic net asset value was around 8.7 billion. It comprised of our portfolio on an intrinsic basis valued at 4.5 billion roughly, and cash of 4.3 billion. During those 115 days, we managed to redeploy 2.3 billion of cash, and that's very important. I'll come back to that later, culminating in a December balance sheet which showed an intrinsic NAV of close to 9.1 billion, of which the intrinsic portfolio value, that's the invested portfolio, was close to 7.1 billion, and the cash reduced to just short of 2 billion rand. The annualized return on the invested portfolio was 14.8%. I think for you as analysts, a very important metric, and I'll unpack that for you later as well. And the intrinsic NAV per share, after there's a performance participation, which does not reduce the income of this business, but there's a dilutive effect because of shares, that has increased from, at listing, the R8.46 to R8.75. Then briefly, just to explain the difference between the IFRS NAV to the intrinsic value. It's basically where the IFRS metric falls short. All listed companies are valued at the spot at the end of the reporting period, and that might be volatile, as you would appreciate. So we've elected to go for a 30-day VWAP, which ensures that we actually take out a lot of the volatility. And it's surprisingly big if you look at what happened in December. That first one is 85 million, and that was predominantly, if you want to go and make the calculation, mostly Afrimat and Alexander Forbes, that one. And it has a deferred tax impact, and that's the 7, which then links to the 85. The BE lock-in on listed shares, to the extent that we have a BE lock-in, as Johannes alluded to, means that we don't have the same tradability. So we then apply a further haircut on the listed price, the 30-day VWAP price, and that one predominantly is Afrimat that you see there. Then there are a host of others, which really is the intricacies of IFRS accounting, and I could either occupy you for the full day or spare you. So just assume that it has been done accurately. That's 4 million. So the intrinsic portfolio value, what we've invested at the end of December, is therefore 7,086 million compared to the IFRS reported of 7,280. In terms of the segmental review, there you can see that already after these months of bearing in mind we actually transferred a lot of the assets in, so we got a bit of a flying start initially, and then we've also now redeployed some of the cash. You'll see that it's a very fine, diversified portfolio if you look at it across the various segments. The largest one being telecoms, and the RAIN within that is the largest. Diversified financials 19, and the others. Jan, you will also talk about them as we progress. I think this is very, very important. Here you can see how we have transformed the cash to assets that work hard for us. The portfolio that's been invested increased by 58%. So we've been very successful in converting cash, which obviously earns, if you're lucky, 8%. And if you're then more lucky, you don't pay too much tax on it because of our structure, because we've got a tax-neutral structure. But I think that conversion is very important. And we've managed to do that with investments that are showing that it's working for us. The consequence of that is that the intrinsic portfolio now comprises 80% of the total invested NAV of the company, and the cash is only 20%, with a healthy pipeline, I have to add. And in terms of financial services and the virtual investments, you can see the split is similar. The segmental review, you'll find this structure you'll see in the financials, where we show opening balance, additions, disposals, fair value adjustments, and the closing balance. And there you can see it on a segmental basis. I'm not going to unpack it for you because all the information is there. I'm coming to the end of my presentation, and this just shows you what has happened. We started off the left-hand bar with our invested portfolio of just short of 4.5 at listing. We've converted the 2.3 billion of cash into proper assets, and the revaluation is 280 million, which balances to the amount I've shown you earlier. And the cash, which started as 4.5, has been depleted, and we end up with 2,368. It might sound repetitive, but what this really says, the investments for this on the invested portfolio value, the income on that was 341 million during that period. And on an annualized basis, that converts to 14.8. And I must say that calculation we've done, that it could be slightly higher. And that gives you an indication. We've indicated up front that we would not invest in companies that don't yield an IRR of 16 or higher on a risk-adjusted basis. And despite what has happened in our portfolio, EOH, that's a mark-to-market, so you're all aware that we've taken a bit of a hammering on that one. Despite that, our invested portfolio over this 115 days yielded close to 15%. That's after costs. And the cash has earned 8%. This demonstrates our ability investing in assets that do perform in terms of our expectations and the guidelines, and also our ability to convert the cash into the healthy pipeline, redeploying the cash. So I think this is the one to watch in future. Then just very, very quickly, in terms of the valuation process, you should be aware that it is a very robust process. We do it internally, and it will then be fully audited by our auditors for year-end purposes in June. What we've done, however, for December, it was done internally, and the RAIN valuation, which is our largest asset, has also been reviewed by a third party, just so that you know. And it depends on the kind of investment, whether it's a DCF. We disclose to you the minority discounts. We disclose to you the tradability or marketability discounts, where it's sometimes it's a multiple. It's a very robust process, and you will see that there is a lot of information in the booklet on that. Johan, with that, over to you. Thanks.
Thank you, Michiel, and good morning, everyone. As Johan and Michiel said, I'm going to unpack the portfolio a little bit for you, but just to say that since 2015, we invested more than 7 billion in the portfolio. The investments that we made before ARC was listed, we transferred into the portfolio, and since the listing, all our acquisitions are done in the portfolios. 100% obviously goes of the diversified investments goes into the fund, and as you know, 49.9% of all. But we don't make any investments outside the structure, so we're very aligned with the investors out there. And as has been mentioned a couple of times, it's the building block approach that we follow, and that's what I want to unpack for you at this point in time. Firstly, two very distinct areas. The one is the financial services side, where Johan has mentioned that we want to build a much more holistic type of business, which leverage off one another, where there are synergies amongst the different businesses. Even though we won't necessarily control those businesses, we will have a significant minority, and we hope to have enough influence to also demonstrate to these businesses how it could actually help them to leverage off one another and show up those synergies at the end of the day. On the other side, it's a diversified investment side, which is very much the building block approach, where these are the building blocks that we have at this point in time. And that doesn't say that will remain like that forever. We may start to look at different building blocks in future. We may sell out of certain building blocks just because the opportunities arose, and that building block will not be applicable any longer. But this is where we are at this point in time. And very, very important about the building block approach is that we partner with who we believe are the best of breed out there in the business. Obviously, we want to bring our common sense, and hopefully we can add value to those as well. And obviously we not manage on a daily basis, but from a strategic point of view, we get very involved in those businesses together with our partners. But that is where we pay a lot of attention on partnering with the right people in those different building blocks. So, first one, we're going to look at the diversified investments. Those are under telecoms, business process outsourcing, mining, construction and energy, agriculture, property and other. Very important that in each one of these, we've got those partners. The first one is really Rain, and that's our main partner under the telecom side. As you know, they own the spectrum. They've got business unit in networks, business to business and direct business. Our partners there are really the Michael Jordan, the guy from Outsurance, Willem Roos also joined them now as to running especially the direct business. I had a long chat to Willem yesterday. He's very upbeat about his new job that he has. He's been with Outsurance for many years. And it's really about the license, the spectrum license they have in those different bands. And obviously the 5G also comes because this is the 4G plus. And the network business is responsible for the expansion of the network and the roaming agreements. They've concluded an agreement with Vodacom where they will roll out their equipment on 5,000 of their towers. And obviously, that's going to be a roaming agreement between them, but they pay for using, obviously, the infrastructure. But I don't know if you know that business, in order to get the approval to put up a tower, etc., you live in certain neighborhoods, you don't want the tower right next to you, etc. So to get that opportunity to roll out your equipment on 5,000 towers, it's magnificent for really hitting the ground running if you own the spectrum already. 2,000 of the 5,000 have been rolled out. They are very much on target with that. The other business is the business-to-business division, and that's really providing the fixed wireless connectivity to end users. That's rolling out through Internet Solutions and MWeb, etc. According to Willem, that's also going according to plan, if anything, a little bit ahead of plan. And it's a fantastic business model that they have. As Willem has said to me, I think there's something like 70 million SIM cards out in South Africa. He says as if he can get 1 million customers, and they pay 300 Rand a month for, and remember this is data, and data has already surpassed voice for both MTN and Vodacom, in terms of their income. Then he says, Johan, that gives me 300 million Rand a month of income. And there's, once you've actually got the equipment on the towers, there's not really much more cost attached to it. He says, if I have 2 million customers, that's going to be, 600 million Rand a month. That's 7.2 billion a year. And that's only from the direct. And obviously, if he can bring a MTN, and he's having discussions with some of the other operators, to have roaming agreements based on the spectrum that you have for the data, it is a business that can really do very well in future. Then we look at the business process outsourcing side. Our main partners there, Afrigem, they've made those investments on that side, which is PayProp South Africa, Consumer Friend, CSG, and also InfoSlips. But we've got some other businesses on the business process outsourcing as well, which is BlueSpec, Autoboys, very much linked to the short-term insurance industry, and we can talk a little bit about that. We've got a stake in Human State, which is really PayProp International. It's only a 10% stake there. And then we've made two kind of like, one has to watch out that you don't call them speculative after the fact. But it was really the if you look at the investment that we've made in EOH, there's no BEE lock-in. And there's a reason for that. Usually when you buy as a BEE partner, they lock you in and they want you to keep you there. And we've actually made a decision after. We actually thought at the time, it was opportunistic. I'm very honest about that. The share price was very close to 150 Rand when we were offered shares at 120 Rand. After that, the shares went up to 175 Rand. We thought we were heroes. We should have sold. I think it actually turned around at 26 Rand 50. That was the low of EOH. Now it's between 70 and 75 Rand. I think at year end it was about 60 Rand, 62 or so. we've decided to actually do our whole business process outsourcing in a different way than to EOH. We think EOH is still a good company. I think they've come out with a new structure now. Obviously, the share prices has taken but it's not a bad business at the end of the day. We've already, long time before the share price, even when it went up, we decided we're going to do it in a different way. But we wanted to engage with the business and say, well, we want to sell, but how are we going to do that, etc., etc. But we sit with that now, and it's been, and the other one, which was also speculative from the beginning, was capital appreciation, and those are the two that actually hurt us the most. So I think through all of that, we've also learned some lessons. Do it for a very long term. Don't do it on an opportunistic basis, even if it looks good, etc. These actually caught us by surprise, and I can tell you that we're not proud of the investments there. I still think that capital appreciation will come right. I think EOH is still a good and very solid business, and will do well in future. It's now trading at, I think, about an 8 PE, with the company showing good growth, not only acquisitive growth, but even organic growth with synergies, etc. But our main investments here in terms of size, in any event, we paid about 509 million for Blue Spec, and Blue Spec is really in the repair and recovery industry, and it enables its customers to deliver efficient propositions to their clients, and it's really to the short-term insurance industry. And the very important thing there is that before the end of last year, they had 0% empowerment. Wiphold and us came in as their empowerment partners, so much so that Blue Spec now is 51% held by Black Economic Empowerment. Very, very large women element then, as well as because of women's investment portfolio. Charmaine and I and others had a lunch with, and Brenda had a lunch with Gloria Sarobi and her team on this investment a couple of weeks ago, just before the board meeting, etc. And we're very, very excited about what can be done in this space, especially because of their positioning and the proposition that they bring in the market, in those different business units of incidents, logistics, auto body repair, salvage, motor retail, and also technology. They look at that whole value chain and can really bring a one-stop solution, to the bigger short-term insurers out there as well. AfriGem, as I said, consists of these different businesses. It's the they look at it. They're a small team. Interesting about them, they sit inside our offices in Stellenbosch as well. The same with Rain, and also the same with our Acorn Agri, which is our partner on the agricultural side. So we like to keep our partners close as well. The largest investment is Payprop South Africa, which is an established market leading residential letting and outsourcing business. They're growing 20% plus every year. They've done so in the past. They're looking at other payment solutions. They adding certain services. I think something like between 8 and 9 billion rand a year actually goes through their accounts now, in terms of rentals that they collect on behalf of others. Just the big data that they collect for those businesses, which they can utilize for areas that they can make available to the banks, and obviously make them pay for it, hopefully at the end of the day, etc. It's a very, very interesting business that they invested in. Then on the mining side, we've got Last Mile Fund, which we do it in partnership with both Bernard Swanepoel and Sipho Nkosi. We've got Elandsfontein, which is a phosphate mine. Afrimat, as you all know, it's a listed entity, and then Global Asset Management is a small business, making oil out of plastics, etc. Elandsfontein is a phosphate mine with the second largest deposit in South Africa after Phosphor, and obviously, as you know, phosphate is a main ingredient in fertilizer manufacturing. There has been an appeal. This business had a water license, when we invested in it, but there has been an appeal against the water license, and the court referred the matter to the Water Tribunal. We remain very confident that the appeal will not be successful and that we will be able to carry on. We've had some, let's call it technical issues on the mine as well, in the way that reverse flotation thing is working, etc., and the pre-commissioning phase, etc., but with some minor capital investments required in order to commission the plant, hopefully early in 2019, that would happen. The main thing that makes this mine also very profitable, if one looks at Phosphor, they have to deep mine it, they take it out of the ground, they have to crush it and take the phosphate out. We take it out of the sand, and then from Phosphor they have to ship it or truck it, 800 kilometers to Richards Bay Minerals. We are 40 kilometers, I think between 35 and 40 kilometers away from the port at Saldanha. That makes a huge difference in these type of things. Although I'm a financial person, I was in mining before. I worked for Genco and Billiton, etc. And this is one of the, the nicest business plans that I've seen. Now, a business plan has to be commissioned and become a business. But we're very, very confident that this mine will still be a very, very good investment for us going forward. Then on the agri side, our partner there is Acorn Agri, that's already got a diversified agricultural business. Just yesterday they got 100% approval for a merger between Acorn Agri and also Oeverberg Agri, which is a co-op, and a very, very good combination there. We've got BKB Limited, which is also a co-op, RSA, Market Agents, and Subtropico. Those are our main businesses on the agricultural side at this point in time. On the property side, as we mentioned, our two main partners there being Jonathan Bear and his business called Buffett KLT. With them we do Setso Property Fund together with Magic Properties. And then with Atterbury we've gone into a joint venture to redevelop the whole Barlow's campus here on Catherine Drive. I think it's 11.5 hectares. We're a third partner there. Atterbury is a third partner. They're obviously the developer, and Barlow's, bringing the property to us. They're a third partner in this as well. And on the property side, again, we go with people that we really trust, that's got a track record, and very, very smart in how they structure the property transactions, take a lot of the risk out and getting the upside, see how much that can be leveraged, etc. And obviously we've invested in Valdevie as well. As you know, it's a residential estate near Franschhoek. Then on the last one, on the other, we've a lot of opportunities come our way in terms of the smaller ones, and with a portfolio of say 9 billion or so, it becomes difficult to look at the smaller opportunity. It's not impossible, and sometimes a small opportunity is going to give you a 20 and 30 times money back, and we really believe we've got some of those in our portfolio. But as a whole, it's very difficult to look at all these opportunities, and we decided to actually partner with Fletch Capital that's got a very, very good track record in the types of investments they've made in the past. And we've taken 51% in them by introducing money, not buying people out, and making it a bigger fund to look at those opportunities in the small and medium enterprises. But they will play obviously across all. And where there could be synergies between us and them, we will obviously try to unlock those as well. But we've decided to actually push our small and medium enterprises through to them. Then that's on the diversified investment side. On the financial services side, our building blocks really manage asset management, insurance, specialist and banking. Under the insurance, we've actually deconstructed that a little bit further into life insurance, general and health insurance as well. So firstly, look at the asset management and insurance side. Our main investments there being Alexander Forbes, EBS International, which is really an admin platform which we believe can be rolled in to some of our future plans that we have as well. Very small stake in Santam. Indue is basically a short-term insurance broking business where we've got both Santam and Sanlam as our partners in that business. Afrocentric is basically our main asset on the life insurance, on the health insurance side, together with Mvuzo and WAD. And then two asset management businesses being Colourful Colourfield's Liability Solutions. I think they've got probably about 60 or 70 billion under management now. And then Lehman View has been a startup by a group of black investment professionals that we are supporting as well to start a new business on that side. On the specialist side, there we've got stakes in A2X, which is, as you know, the rival stock exchange, where you also, they don't expect you to come and primary list on the exchange, but they say it's a secondary listing. You know, we just looked at all the exchanges because there are new exchanges now. The others actually require you to primary list on the exchanges. We just thought it will be very difficult to convince the existing people who are listed on the exchange, on the JSE, to say, well, delist from the JSE and come in list on us as a new exchange. Whereas A2X has got a very different approach where they say, remain listed on the JSE, they're doing a good job, etc., but come and dual list on us. It's a secondary listing. And then the brokers will decide, you know, where to trade the shares at the end of the day. And you know, I think we've already got five or six listings. There are a whole pipeline of people that want to also list on this exchange, and the brokers are very, very happy that they've got, you know, more than one choice, that they can also trade on different exchanges at the end of the day. As we say, you know, we don't say the one is bad or the other one is not. We just giving you an alternative to trade, to list as well. Very easy to list on those exchanges. There's basically 3 pages that you have to fill out. It doesn't cost you anything. And if tomorrow you decide you don't want to be listed there anymore, you can just delist from that exchange. So it's not a difficult thing to do. We try to make it as seamless as possible for the companies, and that's why we believe we're going to get a number of issuers on that. And it's really providing something for the market as well. Bravura, as you know, is a small financial engineering business that we've got a stake in. Edge Growth and Alternative Prosperity really play where they advise companies on their enterprise development and their BE scorecards, etc. So very, very strategic investments for us, but very, very small investments. But, you know, we also open the doors for them to all our underlying investee companies and obviously the other networks that we have, etc. But both of them doing very, very good work in that. Sineo Securities was a black women brokerage, 100% held by black women, and we actually said that, you know, we believe that they can really make inroads into but they needed capital and they needed some, let's call it the bigger daddy at that point in time. We then took 49%, let them keep the 51%, and they've, I think, more than doubled their income and more than trebled their profit in the last year since we've taken a stake in them. Constellation Capital is the 2 Cadiz brothers that started Cadiz many years ago. Started to do a lot of other things in Cadiz. They left Cadiz and they started Constellation Capital. We said, okay, we'd like to invest in your business, bring your empowerment credentials, but then you stay to your knitting. You know, the things that you started Cadiz with, this is what you do now, and we're not going to allow you to do anything else. You have to do this. And they said, that's fine. So we're very, very happy with that investment as well. And then the last one, is Uber, still there, which is the mortgage originator. Now just on that one, you know, obviously we've got all these, and as you can see, a lot of unlisted investments at the end of the day. Many of these investments are unlisted for a reason. You know, Uber's got a very specific competitor out there in the market, being Better Life. They're not listed. You know, there are lots of confidential information about their margins and what's happening here, there, etc. And they don't want that to come out into the market because their competitor will see that. And we can't see the competitors because they're not listed. But now we're a listed entity having a stake in them. And our investors ask, but, you know, we want to see the information of the underlying businesses. So all I'm saying, you know, there's a bit of a balance that we have to then keep at the end of the day, is to say, you know, how much information do we give? And I promise you, we want to give you as much information as possible. But also, we also don't want to shoot ourselves in the foot by giving you so much information that it is competitive information that our underlying businesses don't want us to give to the market, because that will give them a competitive disadvantage against who they're competing out there in the market. So again, we're going to try and give you as much as possible, but hopefully you will see that in some cases we can't go too deep into the information in order to help you on those. The last one is the banking one. As you know, it's probably one of the first ones that we started negotiating, was being the empowerment partner for Commonwealth Bank of Australia. Commonwealth Bank of Australia is the 6th largest retail bank in the world. They come into South Africa as a first shot. They've committed 1 billion Aussie dollars to roll out a bank here that's going to compete on the retail side. They're doing things very, very thoroughly. I think the last week, Michiel, we've paid the money now, and it's now not work in progress, but at the end of December it was still work in progress. But as we stand here today, it's not work in progress any longer. We've got a 10% stake in there, and we can actually earn in up to 15% based on client pools that we make available and doors that we can open, etc. So we can end up with 15% in this bank. It is vendor funded by them. We put in a small amount of money and vendor funded by them with only recourse to the asset itself. Looking very forward to this. I think these type of things usually take a little bit longer than what one thinks. Usually these go through a deeper and longer J curve than what you would have liked. But we believe that being such a big bank in this world, they're the ones with the deep pockets and they can see this through. And I must say the focus that they have had, we've seen so many things in the banking side, Johan, Michiel, myself and others, and then we take it to them and then they say, yes, we like it, but just put it aside, because we are so hellbound focused on what we have to first roll out. Which on the one side is a bit irritating, because we think, let's get on the road with these other things as well. But it is actually a very good thing to see how focused they are to actually roll out the bank as they believe it should be done, and what they've done in the past as well. So we're very, very confident that this is going to be one of the star performers of our portfolio in years to come. I don't think it's not a T20 game, that's a 5-day game, as the business is, etc. But I think it can be a very, very good investment for us. This is just a snapshot to show you everything in terms of diversified financial services and the investment side with the building blocks, and then obviously, all the businesses that we have underneath as we unpack them under those areas. So that's where we are in terms of the outlook. I think there's a positive sentiment taking shape in South Africa, especially after what's happened in December. I think, the discussions around the barbecue fires and next to the rugby field, etc., would have been very different had we had a different outcome in December. So I think that is very good. We welcome that, and we remain optimistic about South Africa. Even the other side, we think there are always opportunities, whether it's going well or maybe not that good. Our businesses, we're a South African company. We are basically this is where we've got a competitive advantage, and that's why you will see that by far the bulk of our investments are in South Africa. Where we've got some maybe in Africa or maybe overseas, it's more about following some of the businesses that we invested in here, into those. But we're very, very exposed to South Africa, and we expect improvement to come with our underlying businesses. I think the diversified nature of our portfolio will really play the key role to achieve the target returns. We've got certain businesses that are there to provide other businesses to leverage off and can provide those synergies, etc. There's others that we've invested in that are really huge growth opportunities. The 20, I call them the 20 and 30 baggers. It's investments where we've made investments of maybe 30, 40, 50 million. But I believe that those businesses can become $1 billion rand businesses at the end of the day. And then we've got the ones, like the Rains, that's really disrupting the data in South Africa, CBSA, disrupting maybe the retail business in South Africa. So it's mainly disruptors out there. Yes, big businesses, but they can, if they get it right And we believe they will, because we believe that we've done our homework when we invested in these. Those can really be huge businesses going forward into the market. So I think that diverse portfolio that we have, it's not all mature, it's not only all startups, it's a whole mix of in different categories, in different building blocks, etc. And that's really going to drive our target returns at the end of the day. We also have a healthy pipeline of potential investments. It's a fact that South African businesses need empowerment. They not only need empowerment, they need credible empowerment. And if you can find credible empowerment, which I believe Patrice is, with money, then you become a very attractive potential partner for any business out there. And that's really what we do. We've walked away from many businesses where we can't get our expected return. We kiss many frogs. They're not all turning to princesses or princes at the end of the day. But that's the nature of the game. But I can promise you the one thing that there's no shortage of is a healthy pipeline of potential investments. I mean, the one probably skill that we had to learn the quickest is how to say no. And quick enough, to not waste time, but also not say no to something that can really become something at the end of the day. So that's the skill I think we have to get right. And we're looking forward to making progress, in terms of our stated investment strategy going forward as well. Thank you very much. So we're going to take questions now. I'm going to ask Johan and Michiel to join me in front here. And I think there's a roaming mic, if I'm not mistaken, up there. So if there are any questions on the strategy, on some of the underlying investments, we will try and answer those as well as we can. And I will obviously refer to my colleagues here, because you've seen there's quite a number of investments. In each investment, we've got a principal person that's responsible for that investment. We've got a alternate person that's responsible for that investment. We've got a resource that works on the investment with the principal and the alternate person, and then we've got a person that's representing that us on the board of that business as well. So for all our businesses, we've got people. Not only do you have to make the investments, once you've made them, you have to start adding value. You have to look after that investment. You have to monitor it, etc. And that's why, even though it was basically the few of us and maybe two others, we're closer to 20 people now in the business. And there are not a lot of people sitting on the reserve bench. They all work very, very hard. But I'm very happy. I think there are people on the telephone as well from maybe Cape Town, etc. If there are any questions, please let's have them now. Any questions?
There's a question over there.
Thanks, Institute of Race Relations. Two questions, if I may, please, very different. First of all, can you give us a little bit more background about the initial listing on Mauritius? And secondly, we've heard a great deal of the potential, which admittedly must be huge, of the three of you sitting in the front there. Can you tell us more of what Patrice is bringing to the sector? Thank you.
Well, let me start with the second question first. Without him, there would have been none of this. I mean, he had the vision to say we want to build over a long period. He has a 30, 40-year vision, unlike many of the other BE players who have a one-year vision of getting rich quickly. We had a long-term vision to say the first phase is to build capital, create credibility, do the right things, and so. The second phase is while keeping these people together by paying dividends and so, then start a credible investment business. Without that, and without that capital that underpins this whole thing, the now 28 billion that is invested in a Sanlam that supports this whole effort of ourselves, there would have been nothing. So he brings virtually all of it. The second thing, he sets the rules quite clearly. You wouldn't see any, transnets and other types of businesses that we deal with. So it's very clearly ethical. What we do must stand the test of time. So clearly the relationships with us, which we developed at the Sanlam and Santam and so forth, is very clearly underpinning all of that. So that is what he brings by and large. It's the clear direction, the strategic foresight, and the commitment of the money, and a big part of the management of a very diverse shareholder group, who many would like to take the money every now and then when they hear, you can make a lot of money by backing this guy or doing somebody else. Keeping them together and keeping them happy. Without him and his brand that is out there, there would have been nothing. That is really what he brings. And he provides the support and underpin. On the investment committee, he sits there. It is being chaired, and he brings people, other key people like Tom Boardman, who chairs our investment committee. Tom also runs a big private equity fund out of Sweden, one of the biggest there for one of the families, particularly in the fintech area, and a lot of what we do trying to do with disruption there. Bringing people like that can add value and that he keeps close, and a whole range of a whole host, of course, of black individuals. So I would say Patrice plays a major role and directly involved on the investment side. Clearly, we do the legwork here, and we prepare a lot of the work, and the first cut of things that we get, he must get 20 proposals a day on where to invest in. He passes that on. Unfortunately, about 19.5 of those are usually bum ideas, but we do go through them thoroughly. And then, do the right thing. And in the end, he has to agree that, particularly, and his input is not so much in the financial side, where he trusts us, but it's really on the ethical side, and to say we can't do business with these guys. He's very strict on that.
If I may add, besides the formal investment committees, etc., where Patrice is a member of, Patrice insists to sit with myself, Johan, and Michiel once a month. We have to tell them what we looked at, what we actually decided not to even pursue, what did we pursue, and what were our reasons that we didn't pursue it any further after pursuing it for a while. He brings other opportunities that people brought to him directly, etc. And I can also tell you that that's not a formal thing, but sometimes it's the better half of part of a day that we sit with Patrice, where we go through that entire list. So he doesn't meddle on a daily basis on what we do, but he's very interested in what we do. He understands what we do. He wants to know. He wants to help where he can, etc. So I must say I've worked with Patrice, maybe not as close as Johan did at Sanlam, but I am extremely impressed with the time and the effort that he devotes to, one of his investments, which is art. He's got a lot of other things that he does as well. I'm very, very impressed with how he does it. You can see it's important to you.
And hopefully he listens to this and he'll up our bonuses now. Sung his praises. I'm just joking. No, he's not like that.
No, I think on the Mauritian thing, it's really, we had from the beginning a very specific objective to get quite a number of international investors in, and they really like that route the most. At the end of the day, we got the GIC and a couple of other investors in, which is the government of Singapore. There were a few others that are very interested to come in, but the timelines that we set for them to actually take their decisions, etc., didn't work out for them. So I think there's definitely some international investors that wait to come in as well. And it was really based on that, together with our advisors, that advise us, in order to attract international investment as well, probably the best route is through Mauritius.
Yes. And just on that, we haven't really explored that or to the extent that we should have up till now. But if you think about a Patrice again and linking the two things, he used to run the BRICS Private Sector Council. There are a lot of rich Indians and particularly Chinese people from the Middle East, not part of BRICS, but there, and I won't mention too much of the Russians and the others, who would really like to access Africa in a way which there's a portfolio of businesses that they can do. Very difficult if you're a rich family to come on your own and open that. particularly also with Patrice's other contacts. You know that he's a key part of the Giving Pledge, which is run by essentially Warren Buffett and Bill Gates and people like that, where in their lifetime they give away half of what they've made. So being part of that, and those guys are not invested in Africa. But if there are credible vehicles, they're willing to do that and access that if it's fairly easy. And that is a phase that we still need to explore.
Thank you. May I just say I hope you will find time to continue these report backs to us in the future.
Yeah, I think if one looks at an investment trust, and even ours is trading at an alarmingly large discount. And I think many times it's about the information that's available in the market, because if the market doesn't understand who and what you are, and because maybe we've had some track records in the past in different other businesses, but we don't have as an investment vehicle like now. So we'd like to give as much as possible information to the market. We've just appointed Ainsley as well as our person that's going to do communication. So we want to communicate with the market much more often than what we have in the past. And I think that's the important thing. At the end of the day, the only way that we will get rid of that discount is if we deliver on a continuous basis in the net asset value growth of the business. And this is not a one-day game. It's also a T20. It is a 5-day game. But when Johan started at Sanlam, it was at between a 30 and 40% discount. That discount, because we delivered on a continuous basis, took the market with us, etc. And this is exactly what we want to do here. It's unfortunate that the share price has done what it's done now, but that's it. We as management can only manage the business, and the share price will take care of itself. But I think there is definitely, a commitment from management to share with the market on a continuous basis what we're doing, so that you understand what the underlying investments are and how they're doing, etc. With that proviso, as I mentioned earlier, that we don't want to divulge too many secrets of our underlying businesses, which are actually competitive advantage for them. Hopefully those are a minimum, and that the most of the information that's necessary for the market to make up their mind as to what we're doing and how the businesses may do, we'll be able to divulge to the market as such.
Thank you.
Johan, may I just ask, may I just say, if you look at the financials once you go back, the note 9, for example, tries to really unpack, and it's warts and all. There's no place to hide in our financial statements, where you can literally go through it segment by segment and all the main investments in terms of materiality, where it shows you exactly how the investment has evolved and performed, and there's also a description of that following it, and it's there in various formats that we do present it. And if we have to, we'll even improve in terms of that form of disclosure.
Some questions here? Where's the mic? Okay, yeah, please go ahead.
Congratulations for the good work that you guys are doing. However, I'm sitting here and wondering what's your own ARC BEE scorecard looking like in terms of yourself being a listed company. I know you have Patrice who's coming in with the capital, chairmanship and all the other stuff. But from a BE perspective, there's many other aspects that play a role. So I'm just wondering, for myself, looking at your company, how's the BE scorecard looking like?
As a startup, we got, this is now one of the peculiarities. The first year when we started, we had to get the BE scorecard. We don't have a year yet to report on. So we have the upfront startup, which is a level 4 BEE. This is what you get as a startup. This is where we've started. Hopefully at the end of the year, in June, we can go back, and the indications are that we'll be substantially better than that. We hope to be at a level 2 at the very least, and that is across the whole scorecard. But we can't do it yet because we've not been operating for a year, and unfortunately, with an audit process, you can't do it proactively and say we are number one. You have to do it reactively, and this will be what will happen when that is the case.
But in terms of that, obviously what we bring to investee companies is that one element on their scorecard, which is the shareholder base. And because it's black money, we bring that. That's the first one. In terms of what we as a business as we run, I think we're about 20 people. And of that 20, I think 12 or 13 of them are black people. But we don't, yes, we want to employ, but I can promise you each and every one of them, what we believe are the best that we could get in the market. And there are lots of people that knock on our door that want to come and work here. And we can really pick and choose, and we pick and choose the best. And we've got very, very, very solid and exciting people in our business. And, from an employment equity point of view, I think we're doing well. But as I say, we bring that shareholder element because the money that we invest is black.
And a lot of it is, from gender base, we also do extremely well.
Too well.
It's tough out here. We only have one male here in the Joburg office. We have, which is our main office. All the others are female. He pleads with us often to get a bit more equity to the other side.
But they're all excellent. Any other questions? There's some questions over there. JP.
Thank you very much. You did 14.8%. What is your expectation for the year to June?
So our target return is to have at least 16%. JP, I think it's very difficult to say. I mean, our expectation is definitely closer to the 20%, but it depends. Some of the investments on the listed side, we obviously at the vagaries of the market, etc. But those are not that many. And on the other side, if one just looks at a RAIN which is discounted at 18.4%, if nothing changes in the business and nothing goes better or worse, then you should get 18.4% for that year for a very big investment which is around about 2 billion rand, etc. And that's after the 12.5% discount for liquidity and another 12.5% discount for marketability, etc. And we believe that there's certain even business lines in that one that we haven't taken into account, even in our business plans, etc. But I think we'd rather stick with our long-term target of over 16% on an annual basis. Very difficult to make short-term predictions on where they would be.
But let me just say where we make our money from. So the first part of our money we make simply because we BE and people give us a discount to buy and they lock us in. The first part of the money is the first 3 to 4 years. As that lock-in evaporates, the value ticks up every year because we have a shorter period in which we can't sell the shares. So that 25% liquidity sort of lock-in that we've specified with each asset, that is a given. If you just keep the thing for 4 years, then that discount disappears. So you get the pickup there. And that you get automatically, whether the business does well or not or so. The second part of what we get is a little bit harder work. Through our investment and through the business getting BE credentials, they have to now work towards making that work for them through our sitting on. And that is very difficult to realize in a 4-month period. This is what we see after 2-3 years that will carry us through. Where the bottom line is that from the outset we get both the discount and this pickup. And if you combine the two, usually we should at least get an over 20% return over a period. And then people say, but our costs are a lot and so. We've seen very clearly, if we can give people an over 15% return for a period of 5 years and so, the discounts, all these things will disappear and become big sort of premiums. When Michiel started at Santam and when I had him as my FD there, we were in exactly the same thing. What is Santam trading at book value now, Michiel?
4 times price to book.
4 times price to book. People should think carefully about whether they buy it, but it's an excellent business. It is massively. When we were there, we struggled
1.1 times.
1.1. But because it's consistently done the capital allocation decisions in the right manner. When we started at Sanlam, we traded 35% discount. And the day I joined, that 35 became 40. So they said, what does this academic know? Anyway, by applying the capital mainly right, not the operational part, we did that right as well, but by doing the capital around the Barclays transaction with ABSA, applying the capital, doing the right thing, not messing it up and so forth, we were able over a period to now where it trades at a 50% premium to embedded value. It's a long time, but you have to that consistency and build in the valuations here. And as we unwind these discounts here that you see, the marketability discount in particular that we have, is those things that while you're building the business, you're going to get that. So it's a long-term game. I know people like Francois and others here complain to us, we don't say too much. But it's closed period when he came to see us. He expects us to say things which we can't say. Over time, only one thing talks. It's the consistency of creating value.
May I just add to that?
Oh, yeah.
Sorry, just a quick. The balance sheet is completely ungeared, bearing in mind it's predominantly growth assets. So it's not hugely cash generative at the moment, but some of these investments will, in 12 months, 18 months' time, become cash generative, which will enable us to gear the balance sheet, and that's magic, as you know, if you do it properly.
Yeah, and not overgear, of course. We're not a private equity type player. No.
Sorry, just two questions on RAIN, if I may. Could you give us an indication of the growth rates? I know it's only 4 months, but could you give us an indication of the growth rates at RAIN versus its spectrum capacity currently? And then also your thoughts on the legal challenge on the Vodacom RAIN deal.
Yes, I can, that we've had, in the due diligence on the Vodacom RAIN deal, people say what we've done is we've essentially sold the spectrum to Vodacom. So, in fact, it all belongs to us. We pay them to be on their towers, and they pay us for using our equipment that runs on their towers. We've had a proper, so we have this legal challenge, and of course it comes from one of the competitors who's struggling. If we continue with the open architecture nature of what we do, and we get another person on, which we hopefully very close to achieve, and do the same deal with them, that will simply kill that thing, because there is no substantive underpin to that legal challenge. At present, we use around 10% of the capacity of the 2,000 towers that we have in peak periods. Some of the towers we do use up till 80% of the capacity, but that is where some of the towers. Just to give you an idea, when we bought into the business, they were contracted. They had about 600 towers up and running, and they were contracted to have 2,000 towers running by the 28th of February. It was quite a steep target to really go and get this network operating. The day before, on the 27th, that evening, we passed 2,000 tower. We had quite a steep performance agreement with RAIN on that. If they didn't make that target, we would have had quite a substantial amount of money back, because this is what you pay for, what you can compete with. So they're on track. I think they have a great team rolling it out. And as those things roll out, the coverage will simply improve, and there will be much more value.
Yeah, and as you know, they really concentrate on the data side of things, not the voice. And obviously rolling out in the larger metropoles. If you go into the country, it's going to be difficult. You're not going to be able to roam on their networks, because they won't be there.
Just one thing on RAIN. You see, we use a DCF, we come with a valuation of 2.4, and then we knock it back by 30% or 25%, 18.4 sort of a thing. The data prices that we use there is not 50% of what we use at present. As we go forward, we expect data prices to fall, and so it's 50 times cheaper 2.5 years from now than what we pay. 50 times, which is 5,000% cheaper than what we pay for data now. And it still gives you a value of those kinds of things.
Okay. You happy with the answers there? Yeah, the growth rate is difficult to say. You know, obviously we're going to roll out these 2,000 towers. You know, there's a very specific contract with Vodacom, which they pay for us for roaming, and obviously we pay for the etc. So I think the growth rate is really on the business to business and business to consumer side, etc. All I can say is that they are probably, if anything, a little bit ahead of the business plan on that, and that's why I mentioned earlier. You know, just talking to Willem Roos yesterday, who was one of the founding members and builders of Outsurance and really understands the consumer market. You know, he just mentioned those numbers to me to say, Johan, if I have 1 million customers, you know, that's 300 million a month. Now we don't have 1 million customers yet, and we have to get them. And obviously, how are you going to get them, etc. And that's what, you know, that's why he was brought in. And we're very happy that he came in and he bought into the business, you know, at the same prices that we bought in, and he thinks that's going to be the thing that he's going to do for the next 10 years. And,
but let me just give you the picture on this. There are 3 businesses. The first one is the network business. There, the plan to get to that valuation is to put up the 5,000 towers in the next 3 years. We have to be at 3,000 towers at the end of Feb next year. At the end of Feb next year. So that is the growth rate using for while we're rolling out the network exactly the same usage as now, where Vodacom will use 15% of our capacity in peak time. This is what it is. And then from there, it's not only the roll out of the towers, but increasing according to the use of data that we essentially see in this, and halving that to say half of that increase will come. We will have half the growth that we see data use come. So it's a very conservative growth rate from the Vodacom tower. Then from the business to business one, we used the growth rate that we saw and the plans of each of the businesses that they presented to us, which we halved. And then the third business, which is the one where we use the individual the data, which we plan to launch towards the end of the year, we would like to have 1 million clients deal with us over the first 5-year period. And that is the valuation. It's not a massive thing.
Yes.
Hi. I would like you to speak a bit more on Time Digital, given that it's quite a new concept here in South Africa.
Yes.
And Mr. Van den Merwe mentioned that it has the potential of becoming one of the star performers for the fund. How confident are you that the public is going to get the required buy-in from the South African public?
Okay.
Yes, it all depends on how accessible that is and how it. So we've looked at many plans. We've been in financial services. We've been invested in ABSA. Sitting there, we sold that stake. We're partnering through Sanlam with Capitec, where we do most of the insurance. We exactly see what they're doing. And when these guys came along, not by chance, I mean, we also spoke to people because of the opportunities that we saw and that we had available to explore, trying to build a digital bank. Now, none of these banks that we see, not the Capitec in particular, is a digital bank. Starting with making transactions cheaper. If you look at transactions and the costs that South Africans pay for transactions, it is high. And I'm talking about coming with a price that is lower than 20% to 15% of what the best prices the major players offer you now for operating a bank. It takes banking to a much bigger base and a wider base and things that you can do. And making it profitable. We've seen that you can do banking here, particularly the transactional side, at roughly 20% of what these other banks charge you at, and still make a return of well over 40% on your investment. And this is what these guys come with. It's not to get a small bank, it's to scale the thing. So they've signed up the major places where people do their expenditure, which is places like Pick and Pay and ShopRite, where they will put teller machines, all linked back to a central place through technology that you can drive these things very cheaply. And they've committed, as we've said, $1 billion Aussie dollars, which is 10 billion rands over the next 5-6 years to roll out this thing. Now, for us, the beauty is they fund us. So we're not really in the driving seat. We support, we sit on the back seat of this car and so forth, but we don't have to put our money up. They fund us. If the thing fails, sorry, they can only claim against their own effort. So we have a massive free option in a way, if you want to look at that. It's in our interest to make that work. And if you look at the financial side of things, what we have there, we have big client groupings. We have Sanlam, we have 7 million people in South Africa insured over there in several segments and so. In the lower segment that we're really focusing on here, there are about 3 million people. They're paying excessively from where their savings are. If you look through Sanlam and Alexander Forbes, we pay 2.2 million pensions every single month. We've shown that through simply paying this thing into a bank account with us instead of to their other bank, which they can then withdraw freely and put their money in the bank where they want to. But we can get a pensioner to save between 180 and 225 rands on average by simply paying less fees. Where will the pensioner go? Our models very clearly show that more than 80%, if you've paid in an account which operates pretty well, they'll stay with that. And these are the key kind of things that we do and can deliver. It's not only will South Africans do it. We've had 400 to 500 machines now operating since we got the license. They're not branded in Pick and Pay or so. We created 280,000 people who registered there, who did their FICA process, who did it by themselves. FICA can takes you around 2 to 3 minutes to do. You walk away with a card right there from the machine. These processes, massive input went into that. And that is what we would like to do, make banking easier. I dread a FICA process, if it doesn't have to be this difficult. And that is really what we're trying to do and make it easy. And once we've set the standards, some people will follow, others will find it difficult, but we can build at least here a bank with 2,000-3,000 transactional clients, and then you add the sort of lending products and things like that. So that is what we're trying to achieve with them. We're very enthusiastic. You'll see some of the products being launched now, that the banking license is approved and so, but the major launch of the bank as a fully owned and flown retail bank will take place in towards the middle of September of this year.
I think Johan mentioned there are 2-3 million customers, not 1,000.
Sorry.
Do we have? That's okay. Do we have anyone on the telephone still? And do they want to ask any questions? Do we know?
We currently have no questions from the conference call.
All right. Can we take a last question from here? It's almost 11:30. We're all done.
Great.
Okay. Thank you very much. Really appreciate your time. Thank you.